Alright, good morning. Let's go over today's trade plan. So in the overnight session, the weakness that we saw yesterday continued, and ES ended up breaking and going a bit lower. And the weakness in the other markets is continuing as well. So right now we are using the 69 to 71 area as the bull bear zone, and our bias is going to be bearish as long as we hold below that area. And given the strong weakness that we're seeing in the other markets, even a break above 71 wouldn't necessarily shift our bias or conviction to the upside. It's just that now we'll be a bit more cautious, perhaps on taking short setups. But breaking above that zone doesn't mean that now buyers are in firm control and we can get a big move to the upside. We would still have to see the other markets responding similarly and getting back above their overnight breakdown levels as well. So right now the focus is more on identifying short setups, and below 69 to 71, we really need to see a break below the 64.5 HVN to confirm that sellers are in control. Otherwise, the market could just be stuck within the recent balance. But if we break below 64.5 and yesterday's low, at that point, we could get a breakdown from the recent range and go lower and test 55 to 57 initial support, perhaps get some responsive buyers active there, and then if the volume and momentum continue to be high and the momentum continues to be heavy on the downside, then even 48.5 to 50.5 wouldn't be out of the question, if the liquidation move starts this morning. So, that's one of the things we'll be looking out for. The market is weak, we know that short term, but how weak is it, right? Like, we should not be getting any, large upside rotations in any of the markets if we're going to get a real breakdown today. So, keep an eye on 69 to 71, keep an eye on 73. Those levels will help us determine how strong or weak this market is. And, with NQ, if we can get a break below 35.44 to 35.50, that'll really confirm the downside weakness in NQ. And in TF, if we break below 11.35, that'll confirm the downside weakness. So if those two things happen as well, if NQ and TF break their own respective support areas there, then that can also help and trigger a move lower in the S&P. On the upside, NQ needs to get back above 35.77 to 35.83, and TF needs to get back above 11.39.5 to 11.41.5 to really start considering some more aggressive long setups in ES, because so far the other markets were lagging the S&P, and from what we saw yesterday, they're now leading the market lower. They're now leading the S&P lower. So if we continue to see weakness in those other markets, it would definitely, at the very minimum, limit the upside in ES. So right now the focus is more on identifying the best short setups, and it doesn't mean that we can't consider longs, but the market has to show us that the underlying bias is shifting, and at the very minimum we need to get back above 71 in order for that to happen. So for now, we'll see if we can identify some short setups even off the open. On the econ calendar, we have consumer sentiment at 8:55 a.m. Central. So far, it doesn't seem like the market is really, waiting on that econ report based on the overnight price action and the fact that we still broke lower. It seems like, it's something to be aware of, definitely. But I think that the directional movement could start even ahead of the econ report. But, when you get close to the 8:55 spot, then just be aware that there is an econ report scheduled, and it could, short term at least, drive the market higher or lower. So just a note to keep in mind. But overall, let's keep an eye on 69 to 71 and 73. Below that, sellers can still maintain control. Let's keep an eye on the momentum and see whether we're seeing the NYC tick being more skewed to the downside, and just overall continued selling pressure. And the immediate target The high odds target, if the downside momentum really starts, is the initial support, 55 to 57. But if the momentum remains high and volume remains high, then even the 48 half to 50 half wouldn't be out of the question. And at that point, when you're getting a bit overextended, closer to 48 half, 50 half, or 44, 45, those are spots where you can get some better long setups even in a weak market. So we'll keep that idea in mind as well. But so far, let's see if sellers can maintain the control heading into the open. Again, we don't want to see any large, range bars to the upside. As long as that remains the case, then we'll focus on shorts. If the momentum starts shifting and we start holding above the bull-bear zone, then we can look into long setups. But even then, it has to be conservative location, and we're not going to get aggressive on the long side in this type of market. So those are the main ideas. Let's see how well the sellers can maintain control, and we will take it from there.